Therefore, our target price, which will change, is around $2,000 in the advertised target price. Since the stock is just under $200, our base case, which isn't even our objective case, calls for a 10x gain. Alarming information. Cathie Wood, CEO of ARK Invest, recently caused a stir in the investment community with her most recent shocking forecast regarding Tesla. Here's the thing. By 2027, she sees Tesla reaching an astounding $2,000 target price, which might imply a tenfold gain in just 5 years. But buckle up, people, this forecast has the potential to drastically alter the state of the market. You may be asking yourself now, should you buy additional Tesla stock right away or hold off on making this prediction? Let's analyze Cathie Wood's comments on the matter. First, though, please subscribe to Tesla Stock News and like this video to demonstrate your support. Let's get going now. Now let's talk about AI. It's no longer just a catchphrase, it's turning into the mainstay of technological advancement. Artificial intelligence is permeating every facet of our digital environment, from software to cloud services. Leading the drive are businesses like Microsoft, Salesforce, and Adobe. Cybersecurity companies like Varonis and Palo Alto are also capitalizing on the AI trend. However, how does all of this affect the economy? Are we in danger, or can AI provide a solution to every issue we face? Dan Ives compares the current technological upheaval to the internet boom of 1995. They really are bringing about revolutions here, and from what I've heard in the Microsoft transcript, the messy monetization of AI is already taking place, as we can see from our daily checks across cloud and software. It's really going to chips now, in my opinion. The software merely prepares the popcorn. It's still that start in the fall in our perspective. This new technology is available here. I consider Salesforce.com, Adobe, and of course, Microsoft's activities in Redmond, and then I consider Palo Alto, which is a shambles when it comes to AI. MongoDB and Snowflake are two of the best pure-play AI names available, in my opinion. Then you look at the cybersecurity segment and see companies like Varonis, Tenable, and Palo Alto, which I still think are table pounders, and we still adore NVIDIA, the company founded by Jensen Huang, the godfather of artificial intelligence. However, this market is so volatile that it's possible to use a magnifying glass to focus on a 60-minute segment instead of what I'm going to focus on, which is tech earnings. I don't plan on becoming very fixated on whether the Fed cuts this year, in March or May. This is the place of the soft landing and the bear tail that they have been using each time they emerge from hibernation mode for the past 10 years. Instead, concentrate on their spreadsheets and valuation. Someone similar to us, who travels extensively, can see the applications. Since the internet launched in 1995, this is the largest bundle transformation. Therefore, in my opinion, we should expect dips, EPS, and other black swan occurrences, whatever they may be, during the course of the next 12, 18, and 24 months. The tech bull cycle is still going strong. Although there can be hiccups along the road, the general course is obvious. Technology is advancing the future and is here to stay. Let's get back to Tesla now. Some investors are panicking after seeing its stock price plummet recently. However, astute investors view this as a chance rather than a setback. Although Tesla is a crazy ride, it's one worth taking for people who recognize its revolutionary potential. Thus, think about this before you make any snap decisions. As the world analyzes Elon Musk's most recent tweets, astute investors are covertly acquiring Tesla shares at deeply discounted rates. After all, when it comes to investment, the biggest opportunities are frequently presented by volatility. Do you recall when Cathie Wood made the audacious bet that Tesla will reach $4,000 back in 2018? In the present day, her crystal ball is once again active. However, the focus is now on Tesla's remarkable recovery. Although there have been hints of uncertainty from investors, Wood's optimism is exactly what's needed at this moment. Her most recent prediction is dependent on two revolutionary wagers: driverless vehicles and robotic taxis. Imagine this: Teslas that operate on their own are whizzing around, transporting people day and night without requiring a human driver. Isn't that like something from a science fiction movie? Wood, however, is not merely daydreaming. By 2030, she believes Tesla will lead this $9 trillion market. With its advanced technology and copious amounts of data, Tesla is well positioned to rule the robotaxi market. Not to mention its extensive self-driving beta program, which has thousands of testers so far and gives Tesla an advantage over rivals. You know who else besides Cathie and Dan is optimistic about Tesla? Our pals from Seeking Alpha. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is the go-to place for investors who are confident in Tesla and are looking for the next big thing in the stock market. One of the greatest places to find pro-Tesla news online is Seeking Alpha, which provides the most recent information on the company, including Elon Musk's innovation updates and stock price targets. Put the mainstream media's anti-Tesla vitriol aside and focus on the facts. For a special discount, make sure to click the link in the description. In the stock market, it all comes down to making calculated moves. Let's dissect it. This is only a starting roll. Nothing too substantial, just enough to get things going. Hold your horses now. This is not your last chance. It all comes down to strategic play and measured risks. It is imperative that viewers comprehend the vital roles that position sizing and risk management play in this game. Let's focus on the action now. The first thing you want to see when a stock, like our friend Tesla here, falls is for it to reach those technical support levels and then rise again. And what do you know? Tesla achieved this, plunging to many significant support levels. They have lowered their revenue and earnings projections, but that is already old news. The train of pessimism has already pulled out of the station. Let's now discuss the long-term strategy. Folks, let's look forward to 2026. That is the actual area of potential. Though there are doubters, the future appears promising. Tesla is positioned to lead the way as AI technology advances. Imagine this. Even Elon Musk is increasing his stake in Tesla shares. It's not a question of if, but when, and believe me, that day is rapidly approaching. However, notice that not everyone is singing the same song. Some are voicing concerns, while others are buying into the dip. Consider Cathie Wood as an example. She is fully committed to purchasing Tesla shares as if there were no tomorrow. Why? To begin with, Elon Musk has a very groundbreaking vision for the future. Tesla has unending ambitions, ranging from robotaxis to self-driving automobiles. Not to be overlooked is the Cybertruck, a groundbreaking advancement in automobile design that has attracted the creativity of millions. Its futuristic, angular look can make it appear like something from a science fiction film at first, but don't be fooled by its unusual aesthetics. The Cybertruck is a daring advancement in terms of both design and functionality. Tesla's Cybertruck, their entry into the electric pickup market, has rocked the automotive world. This enormous car aims to redefine what a pickup truck can be, not merely make a statement with its stainless steel exoskeleton and protected glass. It goes beyond appearances, though. The Cybertruck is designed for efficiency. Its all-electric drivetrain offers remarkable off-road ability, acceleration, and towing capacity. The Cybertruck is capable of handling challenging terrain and hauling huge loads. And there is an enormous demand for this cutting-edge car. Pre-orders for the Cybertruck have been flooding in since it was unveiled, exceeding expectations despite early skepticism from certain quarters. The public's enthusiasm for Tesla's vision of the future of transportation is evident from this spike in attention. However, Tesla's goals go beyond only disrupting the auto sector. With its solar products, the corporation is also making major advancements in sustainable energy. With products like solar panels, solar roofing, and energy storage systems like the Powerwall, Tesla is enabling people to use the sun's energy for their daily needs. The Cybertruck is essentially the pinnacle of Tesla's effort to hasten the global switch to renewable energy. It's more than simply a car. It represents advancement, creativity, and a greener future. Therefore, it's evident that Tesla's influence extends well beyond automobiles as we look to the future. One innovative concept at a time, Tesla is reshaping the transportation and energy landscape with products like the Cybertruck and an unwavering dedication to innovation. Why, therefore, should it concern you? Because investing in Tesla is a wager on the future of energy, transportation, and artificial intelligence rather than just a way to make a quick profit. It's a gamble that many investors are ready to take, especially with Tesla leading the way. Prices aren't exactly matching performance in this scenario, which could present a purchasing opportunity for astute investors. Hold on, though. Purchasing these equities entails riding a volatile roller coaster, and handling it requires steely nerves. Definitely, genuinely. We are arguing that these companies will experience super exponential growth if you are on the right side of change. What is meant by that? It indicates both persistent and accelerated growth at a rapid pace. For instance, Tesla is currently experiencing a lull in the cycle. However, when autonomous taxi networks and platforms take off, as we believe they will within the next 2 years, I will say, we will be talking about a resurgence of growth and a significant increase in margins, as robo-taxi platforms are software as a service SaaS models. These kinds of stories are prevalent in our repertoire. Imagine this exponential growth that is approaching. Cathie Wood and her group at ARK Invest are praising businesses that are expected to grow rapidly and might even go bankrupt in the process. It's not all plain sailing, though. Before we get at the promised land, there are obstacles to overcome. Let's start by discussing Tesla. Although it may be going through a rough patch right now, don't write it off just yet. We're talking about entirely new levels of development and profitability when those autonomous taxi networks get going. Furthermore, the future appears bright with Tesla spearheading the advancement of robo-taxis and electric automobiles. Regulatory approval for autonomous driving systems continues to be a significant challenge, as governments throughout the globe struggle with issues related to public acceptance, safety regulations, and liability. In the past, there has been examination and criticism of Tesla's autopilot technology, with some critics raising doubts about its dependability and efficiency. Another significant problem is safety considerations. Although there have been a number of high-profile incidents involving Tesla's autopilot system, including deadly collisions, the firm insists that its technology is safe when operated appropriately. But worries about the possibility of mishaps and liability problems still exist. Another difficulty is the limitations of technology. Even while Tesla has advanced the field of autonomous driving significantly, fully driverless cars that can maneuver through intricate metropolitan settings are still a ways off. There are several obstacles to overcome, including bad weather, erratic traffic circumstances, and the requirement for quick decisions. Not to mention the more general market forces at work. Rising interest rates, inflation, and unpredictability in the economy could all affect Tesla's growth trajectory. A slowdown in the expansion of the world economy, a change in market mood, or a decline in consumer purchasing might all be detrimental to Tesla's financial results. Hence, even if Tesla appears to have a promising future, it's crucial to proceed cautiously when making investments in the business. Although there will undoubtedly be obstacles in the way, there may be significant rewards for individuals who support Tesla's mission and are prepared to face setbacks. What is the conclusion then? Though contagious, Cathie Wood's enthusiasm for Tesla is not without peril. Although the market is unpredictable, there may be a great opportunity for individuals who can look past the hype and recognize the long-term possibilities in the current decline. That's it then. We've dug deep into Tesla's environment today, examining its potential for rapid expansion, the challenges it confronts, and the tactics astute investors may use to successfully navigate the market. When it comes to investing in Tesla, there are many things to take into account, from Cathie Wood's optimistic forecasts to the larger market forces at work. Now, though, is your chance to speak up. What do you think will happen to Tesla? Do you think it will reach that $2,000 pricing point by 2027, or are there going to be too many obstacles? Tell us in the comments section below. And yes, remember to hit the subscribe button and give us a thumbs up if you thought this information was interesting and educational. You can expect more thrilling updates on Tesla and the stock market. We appreciate your interest in Tesla stock news. Until the next occasion.